This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Hopes of a diplomatic breakthrough in the U.S.-Israeli war with Iran receded as a new week began, with talks aimed at ending the two-month conflict at a standstill and both Tehran and Washington showing little willingness to soften their terms. Iranian Foreign Minister Abbas Araghchi left mediator Pakistan empty-handed at the weekend, and U.S. President Donald Trump canceled a planned visit to Islamabad by his envoys Steve Witkoff and Jared Kushner, dealing back-to-back blows to peace prospects. The deadlock leaves the world's biggest economy and a major oil power locked in a confrontation that has already pushed energy prices to multi-year highs, stoked inflation and darkened global growth prospects.
Oil prices whipsawed in volatile trade on Friday, but were higher on the week, as traders weighed supply disruptions against the potential restart of peace talks between the US and Iran that could help limit those disruptions. Brent crude futures settled at $105.33 a barrel, rising 26 cents, or about 0.3%. US West Texas Intermediate futures settled at $94.40 a barrel, falling $1.45, or 1.5%. Crude futures gave back early gains after Reuters reported that Iranian Foreign Minister Abbas Araghchi was expected to arrive in Islamabad late on Friday to discuss proposals for resuming peace talks with the US after talks collapsed earlier this week.
Moving on to the top news in the energy sector.
President Donald Trump granted a 90-day extension to a shipping waiver that makes it easier to move oil, fuel and fertilizer around the United States, the White House said on Friday, the latest effort to curb rising energy costs linked to the war with Iran. The move reflects a broader push by the White House to dampen politically sensitive fuel price spikes ahead of November's midterm elections, where affordability is expected to be a defining issue for voters. Recent polling shows Trump and Republicans losing ground on the economy, with approval of his economic handling falling sharply and rising gasoline prices weighing heavily on public sentiment. The decision adds roughly 3 months to the existing waiver that was set to expire on May 17, enabling foreign flag vessels to move commodities between U.S. ports through mid-August.
The Trump administration said on Friday it had imposed sanctions on an independent, teapot, refinery in China for buying billions of dollars worth of Iranian oil, as Washington and Tehran head into another round of peace talks over the weekend. The Treasury Department targeted Hengli Petrochemical, Dalian, refinery, which it said is one of Iran's largest customers of crude oil and petroleum products. The department's Office of Foreign Assets Control said it also imposed sanctions on about 40 shipping companies and vessels that operate as part of Iran's shadow fleet. China has said it opposes illegal, unilateral sanctions. Next, we have the top news in metal market. Copper prices edged down on Friday on worries about the continued closure of the Strait of Hormuz. The losses were limited on news that peace talks between the US and Iran could resume over the weekend. Benchmark 3-month copper on the London Metal Exchange was 0.3% lower at $13,313 a metric ton by 1600 GMT. Copper paired losses after falling as much as 1.1% earlier in the session after news that Iran's foreign minister was expected in the Pakistani capital Islamabad on Friday to discuss proposals for restarting peace talks with the United States. President Donald Trump had said on Thursday he was in no rush to reach a peace agreement with Iran.
The US and the European Union on Friday deepened their coordination on critical minerals as part of a broader push by Western allies to loosen China's grip on materials crucial to advanced manufacturing. US Secretary of State Marco Rubio and European Union Trade Commissioner Maros Sefcovic signed a memorandum of understanding for a partnership on producing and securing critical minerals, with a specific action plan for trade announced separately. Rubio did not mention China in his remarks, but said the preliminary agreement with Brussels reflected growing awareness among Western allies of the importance of supply chains and critical minerals for their economic success.
We will now look at the top news in the agricultural sector.
Maize is set to lose more area in Europe this year as a jump in fertilizer and energy costs discourages some farmers as they plant spring crops, analysts said. Crop forecasters at Expana and Argus Media expect the European Union's grain maize area to slip below 8 million hectares in 2026 for the first time this century, as rising input costs due to the Iran war add to drawbacks for growers like low margins and yield risks from extreme summer weather. There are a lot of risks that have built up for maize, between fertilizer, drought and drying costs, Argus Maxence Develers said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.